Ronald Read died in 2014 at age 92. He was a janitor. He drove a beat-up car. He used safety pins to hold his coat together, and when his estate was settled, he left $8 million to charity. Nobody saw it coming. Not his neighbors. Not his family. Because Ronald didn't look rich. He looked broke, but he had one rule. He followed it for 50 years. And that rule turned a janitor's paycheck into generational wealth. Here's what he did. What you're probably not doing. Quick. Note, I'm not a financial advisor. This isn't advice. Just showing you the math. Now let's get into it. Ronald Read was born in 1921, rural Vermont, Great Depression kid. His first job was pumping gas, 40 cents an hour. He served in World War II, came back, worked 25 years at that same gas station. Then he retired. Took a part-time job as a janitor at J.C. Penney. He never made more than $50,000 a year, even adjusted for inflation. He lived in the same small house for decades. He was married once. His wife died before him. No kids. This was not a guy with advantages. And here's the crazy part. While Wall Street guys in the 1980s were making millions on junk bonds, Ronald was mopping floors. Guess who ended up richer? But here's the thing nobody tells you about Ronald's story. He didn't inherit money. He didn't win the lottery. He didn't get some golden corporate pension. He just followed one rule for 50 years. And that rule is so simple. It sounds stupid. Here it is. Spend less than half of what you make. Buy companies that pay you. Never sell. That's it. 3 parts. Let me break it down. Part 1. Ronald saved more than 50% of his income. He lived on less than $25,000 a year. The rest went into stocks. Part 2. He only bought dividend-paying companies. Wells Fargo, Procter & Gamble, Colgate, CVS, J.M. Smucker, General Electric. Boring companies that pay you every quarter. Part 3. He never sold. Not in the crash of 1987. Not in the dot-com crash of 2000. Not in the financial crisis of 2008. He held through. ALL of it. And here's what makes me laugh. Financial advisors tell you to save 15% for retirement. Ronald saved 60%. Advisors say diversify across 50 stocks. Ronald owned maybe 20 for most of his life. Who died richer? Now, here's where it gets interesting. At the time of his death, his portfolio had grown. Over 95 individual stock positions. He'd been accumulating for so long. Even small buys added up. And get this. About 70% of his holdings were dividend aristocrats. Those are companies that have raised their dividends 25 years straight or more. In his final year, alive, his portfolio was generating around $300,000 in dividends. He was living on $40,000. He reinvested the rest. 92 years old, he was still compounding. That's the rule. Now let me show you the math nobody shows you. Let's say you start at age 30, like Ronald basically did. You make $30,000 a year. You save 50%. That's $15,000 a year going into dividend stocks. Average dividend yield, 4%. Average dividend growth, 6% per year. You do that for 50 years. By age 80, you've got between $7 million and $10 million. And here's the kicker. 80% of that wealth came from dividends, not stock price going up. Dividends. Ronald didn't need the market to go up. He just needed companies to keep paying him. And they did. Hedge funds charge 2% fees. They try to beat the market. Ronald paid 0 fees. He didn't try to beat anything. He just collected checks. But I know what you're thinking. I'm 58, Not 30. I don't have 50. Years. Exactly. So here's what changes when you start late. Let's say you're 58 years old right now. You've got $200,000 saved up. Not great. Not terrible. Your goal is this. Turn that $200,000 into $600,000 by age 75. That's 17 years. You need about 7% annual returns, 4% from dividends, 3% from growth. Totally doable. With dividend aristocrats. Now add $1,000 a month in new contributions. That's $12,000 a year. Over 17 years, you've added $240,000 in fresh money. Run the numbers. By age 75, you're sitting on around $780,000. At a 4% yield, that's over $31,000 a year in dividends. You're not getting to $8 million, but you are getting to financial security. And you did it without gambling on crypto, without timing the market. Here's the modified rule for late starters. Can't save 60%? Save 30% of your gross income. Can't buy 95 individual stocks? Buy 3 dividend ETFs, SCHD, VYM, DGRO, low fees, high dividends, automatic diversification. Can't hold for 50 years? Hold for 15 to 20 years. Minimum. The rule still works. You just get a smaller version of the result. Here's the part that makes me angry. Nobody teaches this in school. The financial industry makes money on trades, not holds. They profit when you panic sell in a crash, when you buy high because you feel confident. The system is rigged to keep you active. Ronald was inactive. He bought and did nothing, and he beat 99% of professional investors. Now let me give you 3 stocks. Stocks Ronald would probably buy today. Disclaimer: these are not recommendations, just analysis based on his criteria. Stock 1. Procter & Gamble. Ticker PG. 68 years of consecutive dividend increases. Current yield 2.5%. They make toothpaste, diapers, laundry detergent, recession-proof. Ronald owned it. It still qualifies today. Stock 2. Johnson & Johnson. Ticker J&J. 62 years of dividend increases. Current yield 3.1%. Healthcare giant. Survived every crash since the 1960s. The kind of company Ronald loved. Stock 3. Coca-Cola. Ticker KO. 62 years of dividend increases. Current yield 3%. Warren Buffett owns it for the same reason Ronald did. People drink Coke in good times and bad times. Now, if you don't want to pick individual stocks, here's the lazy version. Buy SCHD. It's an ETF that holds dividend aristocrats. Current yield 3.5%. Set up auto invest for $500 a month. Don't look at it for 10 years. 0 effort. That's the entire strategy. But here's what you need to understand. Ronald succeeded because of time plus discipline, not intelligence. You have less time than he did, so you need more discipline. The rule still works. You just get a smaller result. And honestly, a smaller result is still life-changing. Going from $200,000 to $800,000 in 17 years. That means you don't run out of money at 80. It means you're not a burden on your kids. It means you sleep at night. Ronald Read wore safety pins on his coat because he chose to. Every dollar he didn't spend on a new coat went into dividends. He died with $8 million. But he lived with 0 financial stress for 40 years. The question is this: would you trade a new car today for $30,000 a year in passive income at age 75? Most people say no. They want the car Ronald said yes, and he died free. The system wants you to buy now and pay later. Ronald bought stocks now, got paid forever. He died wealthy, but more importantly, he lived free. No debt, no boss after 65, no fear of running out. And he did it on a janitor's paycheck. You make more than Ronald ever did. You have better tools than he had. The only question is this: will you follow the rule? Or will you be the person at 75 wishing you'd started at 58? The math is simple. The stocks are public. The choice is yours. If you want the full breakdown of dividend aristocrats, I'll link a free list below. And if this made you rethink your strategy, hit subscribe. We do uncomfortable truths every week.